Hello, and welcome to my channel. Today, we're going to be talking a little bit about the two things that owner-operators and small fleet owners are overlooking when dealing with the finances of their businesses. But first off, let me introduce myself. I am Stephanie White, owner of Diligence One Financial Solutions, a bookkeeping and accounting firm that specializes in industry-specific accounting for the trucking and transportation industry. I also do service-based small businesses, as well as do coaching for personal finance and business coaching. Um, I wanted to talk a little bit about a video that I watched earlier this week. Being in the trucking space, with my accounting business, I do try to keep myself on the pulse of what's going on. And there are a couple of channels that I like to watch in regard to that. One of those is ET Transport, which is owned by Ronan Gilkaroff up in, I think he has his operations up in Canada. And he had a video out earlier this week called End of the Road for Small Fleets and Owner Operators," with a big old question mark on the side of it. So two of the things that he talked about were very specific to the accounting space, and I wanted to just talk a little bit about those. One of them was in regard to cash reserves. Um, Owner operators and small businesses having that money. Now that we're in this downturn position within the industry, there are a lot of trucking companies that are struggling a lot, and they don't have the cash reserves to really maintain their businesses. But yet, back in 2020, 2021, they were operating, and they did have that opportunity to gain, from that time, that uptick, in the industry. And, the question became, well, where is that money now? And for several of the people that he spoke to, and a couple of that I've spoken to as well, the money's gone. It got spent in such a way that people really weren't, they were doing things with that money that were not necessarily needed in that moment. There should have been some cash reserves, some money being set aside for the rainy day that we are now experiencing. And so one of the things that I, thought of when I was listening to that was, businesses need to really have at least four different accounts, types of banking accounts when it comes to running a small business. The first one would be an operating account. And that account, of course, is where you pay all of your everyday expenses, deal with your any payroll, just everyday things that are going on with the business are coming out of that operating account. A second account that would be needed would be a savings account. And that savings account is where you're, sort of squirreling away that money for that rainy day. And whether that day be really an opportunity or a challenge, because, sometimes we have opportunities that come about. You want to buy a new piece of equipment or something like that, and it's at a great price and you're ready to go for it, but you don't have the money. So that savings account would be a place to squirrel that money away, to know that you have that capital necessary to improve and increase your business. A third account that would be best to have would be a tax account. So that way you're putting away money to pay Uncle Sam when the time comes, with quarterly and yearly taxes. Having that money already set aside so that you know that you have what you need to pay Uncle Sam is obviously best, and keeps you from having any issues come tax time. And then the fourth account that you would need would be your own personal account, your personal checking account or savings, whatever, but a personal account where you're operating your life, your personal life, out of that account, so that there is no commingling going on between the operation of your business and the operation of your personal life. This way, everything is separated, and you have a much clearer picture of how you're doing in each of those worlds. And then the other thing that I found interesting in regard to the conversation from that video was in regard to the rate per mile and the break even point for small businesses. A lot of people don't know, where is that break even point? How much money do I have to make when I turn that key on and those wheels start rolling? how much per mile should I be making in order to make sure that I am, being profitable? What is that break even point? How much more when I have more, how much more is that? What is my profit? Once I get beyond the basic operating of my truck. So having financial statements being generated for your business on a regular basis would be a way for that to be able to be easy to understand and again gain more clarity around the finances of your business. The three financial statements that you should have um, on a regular basis being generated for your business are the balance sheet, the income statement, and the statement of cash flows. The the two that I think are the most important for the operations of your business are, of course, the income statement, which is also called the P&L or profit and loss statement. That again is a listing of all of the expenses of your business, how much revenue you have coming in, what your expenses are, and then what your ending balance is in the from those accounts, to understand what your profit is looking like. And then the statement of cash flow gives you an understanding of what's flowing through those accounts. What kind of again, kind of a flow are you seeing throughout the course of the month, that allows you to know beyond a shadow of a doubt, I have money to pay for this. I have money to pay for gas. I have money to pay for my maintenance, for my truck. Just looking in your bank account and saying, okay, there's money in there is not enough, to be honest with you. Having those the profit and loss and that cash flow statement really give clarity to the money that's in the bank account. Because you'll spend money for a maintenance issue today and then not be able to make payroll tomorrow because you were just looking in the bank account and didn't really have a clear understanding of what your expenses for the overall month are looking like. So I would really encourage, fleet owners, owner operators to, have those three statements or financial statements generated on a regular basis. Again, whether it be monthly or even quarterly, but it helps to give a clearer picture of what you've got going on. So anyway, I would love to invite you to comment down below about how your business is doing or what things you're doing to be able to um, bring some financial clarity to your business. If you have any questions for me in regard to those statements or opportunities to better run your trucking company, I'd be happy to talk with you in the comments about that. But also, please like, share, subscribe, and turn on the notifications for this channel. I will be making some more videos in regard to explaining those financial statements and some other topics within the financial space that are specific to the trucking industry as well. So again, please subscribe. I look forward to seeing you in another video. Again, my name is Stefanie White, and I'm the owner of Diligence One Financial Solutions. The information about my business will be in the bio down below if you'd like to get in contact with me as well. Okay? I'll see you soon in the next video. Bye.